Good afternoon, everybody. How's it going? What's up? Sometimes when I'm in the grocery store in Idaho with my wife, I like to embarrass her a little bit. So I'll start speaking very loudly with a like very deep New York, like Brooklyn, almost Staten Island accent, which I don't even speak like that normally, but being, from there originally, from New York originally, I can when I want to. That's always hysterical when I'll be walking down the aisle and I'll be like, "Hey, you see this pasta over here?" Oh man, I do? It's not that bad. No, I don't have that bad of an accent at all. I could introduce you to some people. If that sounds fun. It is fun. If you like snow. Um, all right. Jokes aside, let's get through this disclosure so we can look at some of these earnings reports. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the exact same as it was yesterday. Nothing new on here. I really want to. I gotta look at this coin now that you just said that. I'm more interested in even looking at that than at the earnings reports. Coin upgraded at Goldman Sachs with a $282 price target. Is that the top? Is that the top? Is that the top for coin? We'll see. Wouldn't be the first time a Goldman upgrade marked the absolute top or bottom of something, that's for sure. All right, so we got some earnings reports out here that are some important ones, which is interesting because we're pretty much outside of earnings season now. But we got Marvell getting smoked after hours. Earnings were okay, but the guidance is a problem. Gross margin came in a little bit light for expected gross margin for Q1. Net revenue 1.15 billion versus estimates of 1.37 billion. Not great. See Q1 adjusted EPS 18 to 28 cents versus estimates of 41 cents. It's a solid miss. They threw in a nice little $3 billion buyback to help support the stock in the midst of this not so wonderful guidance that we're getting from Marvell. So we got Marvell. DocuSign is out. DocuSign with a nice move higher here after hours. I like that. I'm always rooting for this company. I don't even know why. I have no loyalty to them for any reason. I don't own them in any personal account or trading account or anything, but I'm always kind of rooting for this one. DocuSign with a nice beat on EPS, nice beat on revenue. Guidance is a beat. Revenue guidance is a beat by a little bit. Not bad at all. Not bad at all on DocuSign. We got MDB. I didn't even realize they were reporting today. Probably should have. MDB down. Revenue beats, EPS beats, but it's a weak guide. Okay, and we're still waiting on AVGO. So the other big one. All right, we're waiting on AVGO. The Qs here are trading down from where they closed off some of these earnings reports. The SPY's down a little bit here after hours as well, but including the after hours down move, the SPY's are still up 0.9%. Qs are up 1.25%. It was a big day today for the market. Qs are down over $1 here after hours, and it's still up 1.25%. Really, really big day. And the IWM is trading down about 20 cents, I think, from where it closed, and is still up 0.7%. IoT ripping. We've definitely seen this name pop up in the past. I don't know what it is. Ripping up 25%. I'm not sure if it's earnings or what, but really ripping higher. It was just such a strong day. Such a strong day. IoT's earnings, thanks Dimitri. I mean, this market is, it doesn't stop. Oh, AVGO is out. Let's take a look. Down, moving lower. I just covered some more Qs here. Broadcom, Q1 Semiconductor Solutions revenue is a miss. Q1 adjusted EPS is a beat. Initially, stock is trading down. We got gap out. How come gap symbol isn't gap? I'm gonna manage this position here for a second. Brant, our arm position's moving in our favor here a little bit. Wow. Qs are giving back a large percentage of this up move right now. Where's my bid? Ah. Alright, I didn't expect to be really trading here like this after hours, but I've got this position in the T-triple-Q, and obviously they're kind of wrecking this thing here. Through one more minute. Wow. Click, 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 click. I know all you're hearing is the clicks. Okay. And we got Costco out. Wow, it's a decent earnings day here today. Gap's trading higher. Costco looks like it's a little bit lower. Not really moving too much. In some ways, I feel like this is the most active I've been with my trading all day. Q's with a nice rebound back up here. What's going on? Marvell is still down. AVGO bounced back pretty decently. A solid bounce back from this AVGO. Okay, whoa, 1 second. A lot of after hours volatility in the NASDAQ right now. Yeah, look at that spike down in the SPYs. Yeah, Q. Look at that tail in the Qs. Holy cow. It's real too. $100 round trip in AVGO. No big deal. I see you continuing to post the information. I can't even really read it. Broadcom sees full year adjusted EBITDA about 60% of projected revenue, free cash flow. Skin restructuring that corner continue to be strong. Start to pay down their debt. Semiconductor solutions revenue missed. Okay. All right. Thanks for posting all that, Bill. Appreciate it, like always. All right, now we're slowing down a little bit. Let's pop back over to the market. So yeah, a decent down move here after hours, but even with that, we're still up a lot. I mean, today was such a massive day, and I mean, it's not really that unexpected if we were able to get back above SPY 510 and QQQ 440, which have been the key levels that we've been talking about. 2 trading sessions ago, we had that one really weak day. They brought us down into equilibrium, but we held our major support levels. We've been talking about this every morning, every afternoon. Yesterday was a battle to recapture the momentum support levels that were lost 2 trading sessions ago. And then today we very clearly got back above them and just ripped higher. And you know what led us higher? We were led higher by the semiconductors. The semiconductors just continue to just be absolute monsters. This NVIDIA was a complete monster today, giving continuation. AMD was a little bit weaker, but Taiwan Semiconductor is a monster today. Just huge move to the upside. And at the same time as that was going on, we were hitting points where you could get an oversold bounce from Google, which we got, which helped the SPYs and the Qs to be able to bounce better. You can get an oversold bounce from Apple, which at one point we did get, though they faded that very hard in the last hour of the day. Microsoft moving here after hours? A little bit. So, you know, Amazon, I'm pretty sure was, Amazon super strong throughout the day. Meta, I mean, Amazon, Meta, these names have really been the leaders. Meta above $500, giving continuation. Amazon, you know, really strong intraday also. So just all this stuff, you had an environment today where the strongest stocks that were the most extended, like your NVIDIAs, were able to just continue higher with momentum. But your weakest stocks, the ones that have been down most, Google, Tesla gave a decent intraday bounce. Those names are able to actually give oversold bounces, which also supported the market. So you had the strongest stuff getting more extended supporting the market. You had the weakest stuff giving oversold bounces supporting the market. And guess what? The market just absolutely was on a tear today. It was like I think a 2% day on the NASDAQ on the upside at a certain point today, which is just massive. You know, SPYs also got back up to that previous resistance from a few trading sessions ago, and we're really testing it and working higher. So just a super strong market day. You can't be surprised. We're in an uptrend, and there's no real extension. So it's like I've been saying every morning, until we lose key support levels, until we actually really fully lose those key support levels, you should just continue to err to the side of being long this market. Take those trades. Don't be afraid of the momentum trades where you're buying them a little bit high to sell them a little bit higher. Don't be afraid to look for oversold bounces and dips to buy at the same time. And that's been where it's at. Well, these were weak earnings after the close from Marvell and potentially from this AVGO, which is all over the place. It's back down now. Potentially negatively impact the market for tomorrow. It might, you know, right now we'd be gapping down tomorrow morning, but we'll see how that actually plays out. Just an incredibly strong market. From a trading perspective today, actually I wanted to review the small time frame of the market also, which I thought was worth taking a review of, just so we can, you know, continue to understand how small time frame technicals work. So similar to yesterday, we had a really large gap up. I think it was about 0.5% or more for the SPYs and Qs. So that's going to create that opening extension from this gap. What do we need to see whenever we get these larger gap ups is we need to see how the market handles that extension in the beginning of the day. Do we trade straight down and price correct with momentum, which could be problematic? Do we go sideways and time correct, which is probably the most bullish, healthy thing that can happen? It basically becomes a bull flag. Do we do a combination of like a grind lower price correction with us moving sideways that lets this ADMA catch up? That tends to be the most common thing to get. And then what you want to see is once the market is working its way towards that equilibrium area for the first time, do you get some sort of pivot? That's what happened yesterday, right? Yesterday we time corrected for a half hour. It was an even bigger gap up yesterday. Time corrected for a half hour, sold off on an economic number, but that just price corrected us into equilibrium where we got this doji candle to bring us up. Today, similar but different. We spent the first 15 minutes more or less time correcting, more or less moving sideways. Then we had a quick pull. This pull, honestly, I really like this candle for a long when this happens on these gap ups. I prefer if the low is a little bit closer to the ADMA. This has a little bit of extension to it that I don't love, but this is a technical continuation hammer into the equilibrium zone. Again, would be perfect if this low, this tail could could have ticked this ADMA a little bit, but this was a continuation hammer that's worth noting. And 5-10 minutes later, the ADMA is caught up to that low, and then once the ADMA on the 5-minute catches this low, this becomes a very important actual pivot low that you should be able to get continuation off of. And then if that low were to break, then the market kind of goes in the penalty box, and you'd be a little bit more patient. Maybe you look for a 15-minute correction pivot, or you look for a gap fill pivot, but at that point the market tells you to be a little bit more patient. But we got this perfect hammer here on the fourth 5-minute bar of the day. Within 5 to 10 minutes, the ADMA caught up to that low, and then that becomes the low of the day, and we were able to work our way higher throughout the rest of the day for the SPYs. Q's just in this really grindy uptrend. We've seen this a lot recently, this really grindy uptrend where they sell us a little bit in the last hour of the day, but just a super, super strong day there. We already discussed why. Weakest stocks of the NASDAQ bouncing a little bit today. Strongest stocks of the NASDAQ giving upside continuation. So the Qs were just phenomenal as well. And, the IWM, I would say was a little bit disappointing because I keep looking for relative strength in the IWM. But it really wasn't that bad. Up decently on a percentage basis. It just couldn't get the intraday follow through. So it gapped up real big and pretty much went sideways all day, which is fine. I think that there's been a lot of trading sessions recently where the SPYs and the Qs have gone sideways all day, and the IWM would have more movement and trend a little bit higher. And then today was kind of the opposite. SPYs and Qs were just super strong. IWM gapped up big, and then was pretty boring price action throughout the rest of the day. But popping back over to the SPYs and Qs, so there's your first correction. That's a really important one. And then you're measuring and watching this movement. Keep in mind that the ADMA is the upper band of equilibrium on a 5-minute chart. The space between the 8 and 21 EMA is what I consider to be broadly the equilibrium area for the market. But the 21 EMA coincides very closely with the ADMA on the 15-minute chart. So you could look at a 15-minute chart, but honestly, you could also just look at a 5-minute chart to give you a picture of what the 15 is doing as well. You know that the 15 is extended based on where the 21 EMA is on the 5-minute chart, if that makes sense. So we need to understand extension on multiple time frames and how that works, right? You get this opening extension on the 5-minute chart in the beginning of the day when your 5-minute chart is very important, but that was satisfied by the time the ADMA caught up to this pivot low. And at 10 a.m. still, 9:45 to 10 a.m., really the 5-minute chart's what matters. It's not so much the 15-minute chart. Even like 10 to 10:15, it's still more 5-minute chart momentum. But once you start getting into that 10:15 to 10:30 time of the day, you want to pay more attention to your 15-minute chart. And again, these are more like guidelines, right? These are not hard, fast rules. There is no hard, fast rule that says by 10 a.m. you have to have full price correction of a gap on a 5-minute chart. By 10:30 a.m. you must have full correction on a 15-minute chart. There are no guarantees of any of that. These are guidelines, but these guidelines tend to work out very well. So I remember noting here that it was 10:45 and the 5-minute chart, not forget about the 15, at 10:45 the 5-minute chart started to accelerate higher. Unless you're in an environment where there is real new news coming out, like almost in real time, that's coming from the Fed or something like that, and maybe you could make the argument that Jerome Powell was speaking at that time, but the Jerome Powell speaking to the politicians is pretty much a non-event here for the last 2 days. So to get this sort of like continuation extension on a 5-minute chart on the indices at 9:45, which is a time of the day where you're typically fully corrected on a 15-minute chart by then, says to me at least like, all right, this market needs to take a pause. So this was a spot where I called out like putting on the bigger short position to look for the 15-minute correction. And when I'm calling that trade out, when I'm taking that trade myself, which I did take with the Qs, with the TQQQ specifically, first of all, just to repeat myself, there is no guarantee that you are going to get that actual correction on the 15-minute chart. It's just that, probability speaking, it's likely. And even if you get the correction, there is no guarantee that it's going to be price versus time. Ideally, if you're taking this short because you're looking for that time of day to correct on a 15-minute chart, you're going to make the most amount of money if you can actually get the price correction. If you can get, this pivot high to lead to a fast move to the 21 EMA, which again coincides roughly with the 80 EMA on the 5, that's what's going to give you the best P&L. If you're, shorting the SPYs here at, I don't know, 514.75, you could have taken that trade when I called it out on the SPY. Forget about, usually I'm taking in one of the leverage ETFs. But in the SPY there, you could have taken this trade for 20 cents risk. This is a $500 ETF. That's nothing. And you're looking for the potential, if you get a fast correction, down to 513 or so. And that just is a really good risk reward in that spot. You're risking potentially 20 cents to price correct just to the 80 EMA. It could be deeper than that. You could get a correction to the 21 EMA deeper into the equilibrium zone on a 15-minute chart. But all you can expect is just the correction to the 80 EMA, the upper band of equilibrium on the 15, which again, to repeat myself, corresponds with this 21 on the 5. So, if you can get that move down to, 513 to 514 or whatever, that's a really good risk reward off of this high. That's what I'm looking for. But guess what the market did? The market was so strong, it basically just went sideways. A little bit of a pullback, a little bit of a price correction, but we basically spent the time from 10:45 to the time in which the market actually touched the 21 EMA on the 5, which at 11:35 a.m. We spent that 50 minutes almost just going directly sideways. So you get this time correction here. It's not as profitable of a short, but you can't predict that. It's enough to cover your risk and probably to make some money. And then the new high comes in and you're getting stopped out. And at that point, you want to get stopped out. Because once it's, this midday, which I normally don't like trading midday price action, it tends to be a little bit more rangy. But if it's midday and it's a strong day and opening highs are breaking, which at this point is the 10:45 a.m. high, are breaking midday to the upside, after you have no more extension at all on a 15-minute chart, there's a good chance that you actually will go into one of those algorithmic grind higher, which you can see that a little bit in the SPYs, you can see it much better in the Qs. Once we broke this high here, it was just this straight pattern of higher highs and higher lows, upside grind until the end of the day. And then when you have those upside grind days, it is very typical that we see a pullback into the close. Last 30 minutes, sometimes the last hour, and that's basically just because enough profit taking comes in from the day traders and trend following algorithms that are intraday. Enough profit taking comes in that you begin to actually break that uptrend, and then you get a little bit of a feedback cycle of selling that comes into the close where the initial profit takers push out the trailing stop profit takers, and then you can sometimes get a bigger pullback. This one actually happened a little bit earlier than I thought it would happen. I thought this was going to happen more in the last 30 minutes. It started pretty much at 3 o'clock, which we also do see sometimes when that happens in the last hour. So I just thought that this price action was worth reviewing the intraday action of, just for lessons on how those kind of uptrends work and extension on multiple time frames in conjunction with gap analysis, because I think that is pretty important stuff. As far as individual trades go, a big focus for me obviously is continuing to manage this arm position to the short side. It was very difficult off the open, that first 10 minutes, off that massive momentum rip that was going on in this thing. Luckily, my position from yesterday was light enough that I was able to increase some size initially in the gap, and then I increased some size to the short side initially in the up move, and then I kind of took a pause from it, and I didn't short anything for a lot of this up move until just below 146 on the way down, actually. I put in this high at 146.54, and I think I shorted a much bigger position and actually added to my core position at 145.85, I think it was, on the way down. Not an easy trade at all. It was not easy to manage this thing. But like I was saying even in the beginning of the day, and like I've been warning, I'm trying to be a little bit bigger picture on this trade, just with that huge lockup expiration that's set to hit on Tuesday. A lot of times they front run that stuff before the lockup. We're obviously not really seeing that yet. As I say that, though, This thing got super weak in the afternoon compared to the NASDAQ, compared to semiconductor names. It kind of started with this lower high here, and then it just wasn't able to continue. And then it broke through this intraday support at 143.50. And then I remember I called out the short through 142, but I thought it would need the market. But all the same, when that 142 broke, it gave us even further downside. At the end of the day, for anybody that was able to keep it, I think it might just be me and Brant at this point. This is a great looking candle for us for continuation. I want to see if I can get a move to this 21 EMA on the daily to this 125 area over the course of the next several trading sessions as the lockup expiration unfolds. And I'm being helped a little bit by Marvell and AVGO trading lower here after hours. So there's that. I focused on Rivian today. Unfortunately, I got pushed out of this thing and missed the move. It was having that event at 1 o'clock today. We knew that. But it also got what I thought was a pretty solid buy initiation from Jeffries this morning. And so I was combining the analyst, and I have found that analyst initiations tend to have a much lesser impact than actual upgrades and downgrades. Same deal with just price target increases and decreases. That has a much less impact, I think, than actual upgrades and downgrades from analysts that are already analyzing the company. And we know that a lot of these are clown grades. You spend a lot of time talking about how the sell-side analyst is like the biggest joke on Wall Street. But it doesn't mean that they can't be market moving. They definitely can. And when you can combine news and technicals, that's what I love to do. So I liked the inside and up that was forming in Rivian in conjunction with the buy initiation that came from Jeffries this morning to go long. So I started buying a decent position pre-market, which was obviously communicated. And then Q's just spiked a little bit. And then I was adding when the market actually opened, but I got pushed out of the position. Again, I was buying pre-market at a pretty decent price, like 11.30 or whatever, and was able to sell some as high actually as 11.65, I think, right before the market opened. And then they pulled this back to equilibrium. That's all fine, right? We just spent some time talking about how markets need to handle and digest gaps. And then I really liked this pivot low here that came in at 9.45 off the 80 EMA. Like now the 80 EMA is caught up. I got my pivot low. It's in play. It's showing relative strength. The volume, it's hard to tell because the volume picked up so much bigger later. But this was actually good relative volume off the open this morning compared to like yesterday. And then the trade just failed. So, I raised my stop to this pivot low. Put my stop loss in at 24 cents. Got stopped out. It was pretty much a break-even trade at that point. And then I looked away because I don't like to go back to the well after I get stopped out. And then the event actually occurred at 1 o'clock, which ripped this thing up and enabled it to work towards my targets, but it did it without me. And that's just fine. That's just fine. That's just how it happens. Traded a little bit of Google today, a little bit of Apple today, but it was very light in them. Made a very small amount of P&L on it and closed out the positions by the end of the day. I think that pretty much covers my day. Trading the indices a little bit, primarily via the TQQQ, heavily focused on that ARM, Rivian at the open, a little bit of Apple and Google, and managing my open positions. So that's pretty much all I got. I'm happy to take a look at any questions that you guys may have or anything that you guys want to review. Scroll up here in the VTF and see if I miss anything. Concerning stuff. Is Costco getting smoked? Costco's getting hit. BBAI is out. Whew, down 18%. I mean, this stock's nuts. From Chris K. You should do an entire afternoon meeting with the accent. I don't think I could. I don't think I could do it. I can't do it for more than a few sentences. I'll start cracking up. Maybe if I had a glass of whiskey or something. For your real question, though, do you have any rules or ideas of how to justify taking a trade long in something like NVIDIA today? I tend to try to stay away from new trades that are not close to their 9 EMA on the daily. Maybe that's not a good rule. Or maybe I'm the only one that thought it was a little bit too extended. Um, no, so I agree with you entirely. I agree with you entirely, and I'm of the same thought process. I use the 8 and 21 EMA, 9 EMA, whatever, same, whatever your tool is that you use to help you understand kind of equilibrium for stocks. I am very much an advocate of not chasing price. To me, the definition of chasing price is buying stock that has moved far away to the upside, away from those moving averages, or shorting stock that has moved far away to the downside from those moving averages. So I am not an advocate of that, because while you can make money with momentum, the definition of momentum is the higher the price, the higher the demand. It's what can create a parabolic. Momentum is what enabled Nvidia, which was already extended as of yesterday's close, to become even more extended as of yesterday's close. You can still get further movements in that direction, but the problem is when you're trading stuff like that after the big move has already happened, you are inherently giving yourself a much worse risk reward and probability of success on your trading. I do think that some of that comes down to the trader, him or herself, though, and what type of trader you are. I struggle with what I consider to be pure momentum trading. What do I mean by pure momentum trading? Buying really extended stocks for continuation. And I struggle with that not just because the risk rewards are not as good, but also because and this is again, knowing yourself as a trader is one of the most important parts of trading psychology and the business as a whole. I know myself well enough to know that I tend to struggle and not trade well if I'm getting stopped out of a position and I don't know that my idea itself was wrong. And inherently, if I was buying Nvidia this morning at 900 and I don't know, let me look at the 5-minute chart. If I was buying Nvidia at $910 today, and I got stopped out at, just making up a random number, 909. I have no idea that my idea itself was wrong. I could easily get stopped out at 909 because of the extension, and then next thing I know, it's at $1,000. And so what that turns into for me, which is a problem, is when I get stopped out of something and I don't know the idea was wrong, I begin to churn it. Like as soon as I see it begin to uptick again, I'll go, oh, I knew I was just getting shaken out of the position, and I can come in and begin to churn the stock. And then what ends up happening, and I've learned this from experience, is the over and over and over again, if it wasn't truly a shakeout, I'm rebuying the stock at a higher price, then I'm getting stopped out at a new lower price. Then I see it uptick, and I rebuy the stock at the higher price, and I get stopped out at a new lower price. And I end up losing more by continuously buying higher prices and getting stopped out at lower prices than if I just bought the stock at the higher price to begin with and gave it significantly more room. So I don't really do that too often. Now, there are traders who are even part of this team who are very good pure momentum traders. They don't care as much as I do about being right or wrong. They just have their rule set, which is always the key to successful trading, is to have a rule set and to be able to follow it. I always feel like having a rule set and having the consistency and discipline to be able to follow it is actually more important than what your trading strategies and system actually are. It is the ability and discipline to be able to follow it is more important than, again, I think what the strategies are. And there are pure momentum traders who are even part of this team who might look at Nvidia today and go, well, I don't care that it's extended on the daily chart. Look at this beautiful 5-minute breakout here at 1010. I'm buying that for the momentum. And I'll just put my stop loss in and give it tight room or whatever and just look for that continued momentum to just keep coming in. And they're able to be successful with that. So to circle back to the specifics of your question, what you're describing is very similar to my own approach. I struggle to really take those momentum trades when you've got a lot of extension on the daily chart, when you're on a day 6 like this, even though they can work. With all of that said, one of the things that I've been emphasizing a little bit more over the course of the last month, and what I've been trying to do even a little bit more myself, is to actually take some more of those momentum trades. And that's because of the market environment that we're in. I think that this is another really important key to successful trading, is understanding the market environment that you're in and adapting to that environment. And we are in an environment here that is momentum. It's momentum with not everything, but with crypto names and with some meme names and definitely the semiconductor names, and to some degree potentially even the market itself, where we could be in an environment here where we eventually see the entire market crash to the upside and completely go parabolic, and it'll seem insane to a rational trader, but people will just, the Wall Street bets community will be just chasing and chasing and chasing price. So I've been trying a little bit more to be more open-minded to buying like a NVIDIA today than I normally would be, because I know in this current environment that we have right now, the momentum is there, and especially when the option flow is confirming it, you can get NVIDIA to open at 900 and close at 925, even if it's super extended, and you can take the $910 breakout on the 5-minute chart and still get paid. I was communicating. I was like, wow, NVIDIA looks super bullish. Wow, NVIDIA's bull flagging. Wow, this looks like a great pivot low in NVIDIA. But I didn't buy NVIDIA through 910 because of what the daily chart looks like. But you easily could have, and you could have made money doing it. And I'm trying to be more open-minded to that trading until the environment changes again. And that, by the way, is why it's so important that we start every morning and every afternoon meeting with a review of these daily charts of the SPYs and the Qs and the IWM, because that is where we can get a view of what that market environment is, which then in turn should be influencing the types of trades and types of strategies that we are doing. And that's why I review this. So when does the market environment change? The market environment changes when we eventually, someday, somewhere, lose a key major support level of the uptrend. And when that happens, I don't know exactly what that's going to look like when it does, and I don't know when that's going to happen. It could be tomorrow, or it could be 6 months from now, or it could be a year from now. Eventually, when that happens, we'll have a market environment change, and we won't want to be chasing extension in the same way that we've been kind of able to do it recently. So, appreciate the question, Chris K. Great question. From Vikas, what is the most comprehensive resource for chart patterns? I know the basics, but I'm curious to looking through high quality material. I don't have a good recommendation for you on that, on chart patterns specifically. I've got, I don't know if you've gone through all my training program classes. I've got a couple that get into, there's 2 classes in there that do the basics of continuation and reversal patterns for the market that you can take a look at if you haven't already. I've always been of the opinion that chart patterns are overrated, which isn't to say that they're not important, just that a lot of people think that they can just memorize what chart patterns look like and become very successful traders. It's more important to understand the nuances of supply and demand that's making up the chart pattern in conjunction with what the market's doing, in conjunction with the relative strength or relative weakness of the stock that you're looking at, I think, than just the actual pattern itself. So I don't have like a book, honestly, that I could recommend to you. My favorite book on technical analysis, if you want to check that out, which isn't, again, it's not as much about chart patterns, and that's probably why I love it. It's Technical Analysis on Multiple Time Frames by Brian Shannon, worth checking out. But chart patterns themselves, I mean, you can, for the most part, just Google search and learn what they look like. And again, watch the training program classes that I have, where I kind of go through some of the basics of them. But I really think it's more about, yeah, sure, take your chart patterns, but it's about these layers of probability. Cool. The layers of probability, as I describe in the probability class that I have in the training program, which I think is probably one of the 2 most important classes that I have in there. That's where you begin to put it all together. You know, like if I was working with an entry level trader who was just starting to trade for the first time, you kind of have to start by giving them something basic. So you can be like, hey, this is what a breakout looks like, or hey, this is what a bull flag looks like. But I think that successful trading is a bit more nuanced than that, because you need to look at those same basic things, which can really work, breakouts and bull flags. They can work fantastically well, but you need to look at that through the lens of all these different factors that will affect any trade that you're getting involved in at any time. Factors like the market, factors like relative strength and relative weakness, news, volume confirmation, all that stuff, putting it all together at the same time. So appreciate the question, Vikas. I hope it helps to some degree. Not seeing anything else in the VTF for the moment. So popping over to YouTube, another 40 orders. I'm not sure what you're referring to there, T squared. From Gabriel, I tried the RDR DOO in Apple today. I closed the position into the close, but it was looking decent. Small winner. Yeah, Apple didn't close well. Apple didn't close well enough to keep it, I didn't think. The trade was there, and it was there pre-market if you were up early enough. It was down at like 168 or something pre-market, where you could have started to build in. So that's that. Back over in the VTF, Vikas is asking, where is everyone looking for option flow? I only use one resource, and it's the VTF itself, personally. And that's because we've got some great people here, namely Patrick and Bill, and sometimes Anastasia, and some others who are posting that option flow in real time. So I think that what you want to do is have the VTF chat kind of built into your trading layout, so that you can so that you can just see that flow when it's actually coming in. And now that I'm mentioning that, it reminds me. I noticed that there's been a bunch of you other guys, Elliot and obviously Dimitri and several others, who have also really started to step up and just post more information in the VTF, especially in the mornings, more news, ideas. I just want everyone to know that that's very appreciated. I'm going to say as a general rule, maybe it's not 100% true, but for the moment it is. More information in the VTF is just better. So really appreciate everybody else who's started to step up more and more and more in so as getting information into the VTF, because it helps the entire community. Back over to the YouTube. From Sebastian, good to see you, Sebastian. What do you think about buying the T inside daybreak today? So AT&T. So I don't like inside days within the confines of broader consolidations, unless maybe there's news or volume that's really coming in and confirming it. This is just a big consolidation. This is actually a potential head and shoulders pattern that's starting to build out in AT&T with this kind of ascending neckline down here. I don't think that this is the right stock to do that. I don't think that this is the right spot. You know, boring stock, tends to not trade well to begin with. An inside day within the confines of a broader consolidation. Maybe the stock's been improving a little bit recently, and you're trying to buy the breakout utilizing an inside day to have like a breakout through 1725. I just think that there's better things out there that you could focus on. So appreciate the question, Sebastian. From Kevin, what are your thoughts tomorrow on the non-farm after such a big move? I'd expect a big move to the downside overnight for a heavy bounce if the numbers are positive tomorrow. These days have massive trend opportunities. Yeah, so obviously I have no idea what the number is going to look like, and even if I did know what the number is going to look like, I still couldn't necessarily predict the move. I thought that one of the more interesting things of recent events was 2 trading sessions ago when we had ISM manufacturing come in light, and the market bounced for 5 minutes and then sold the rest of the day. I thought that maybe that was marking a potential, is this different situation? And obviously it wasn't, because here we are 2 days later making all-time highs again. So we'll see how that plays out with the economic number tomorrow. It certainly should be market moving, but given what happened with that, there's always this back and forth, right? In the long run, better economics is better for the stock market, but in the short run, especially in an environment that we've been in more recently, sometimes better economics is worse for the stock market because it means higher inflation, and worse economic situation is better for the market because it means inflation can come down and the Fed can ease. So we've been in more of that opposite environment with certain numbers, and maybe other numbers not so much. I had called for like a couple months ago, perhaps incorrectly, as we're coming into the new year, that we would go into more of a good news is good news again and bad news is bad news again environment, and it hasn't necessarily been that way. It's been an any news is good news environment. It's been an environment recently where good news for the economy makes us go higher because it's good for the economy. Bad news for the economy makes us go higher because it means that inflation's coming down and the Fed can cut. So I don't know. I really don't know. To be completely, totally honest with you, I don't know how the market's going to react. I think if you get like a very hot number, the market's going to sell off on it. I think if you got like a very bad number, that the market would probably sell off on it as well. But things that are closer to neutral, well, is probably going to be what's best for the market. But that's just kind of my feel right now. So we'll see. Cool. Sounds good, Kevin. All right. Well, it's 5 o'clock. Looks like I got through everything in the VTF and in YouTube. It was another great trading session today. I hope everyone was profitable, and even more important than that, I hope everyone is learning to set themselves up for future profitability. So keep up the great work, everyone. Let's keep making our community strong, and I will see you all tomorrow morning.